Good morning. It's Wednesday, November 17th, and you're listening to the Hardcore Mortgage Podcast. I am Becky Alley. Harry Glanz is out on a closing, doing his thing. I got Mr. John Kolb, my top 1% in the nation. What is up, John?
What is up, Beck? How are you? Welcome
I'm
to
fantastic.
Wednesday,
I
Hump
know,
Day.
hump day, hump day. We also got Harvey Freed with us, who is the host of the Hardcore Mortgage Show. He is going to be absent this Saturday because he's going to be doing his thing in Vegas. What's up, Harv?
Oh, somewhere, maybe Vegas or California. It's sort of parts unknown, not sure yet.
I mean, I haven't been to Vegas in probably like 10 years. And I feel like when I was going during that time, I was going like every year and something would be changing. So I could just imagine the village will be awaiting for me when I hit it up for my 40th, because I think I'm going to do that.
Becky, every time I turn on my cell phone, I see that all these real estate agents are out there learning all these new techniques and all sorts of training is going on. I'm going to get on that bandwagon a little bit and see if I can shake some hands.
Yeah, I'm here for it. EXP, I think they just had their little rendezvous there, if I'm not mistaken. So
Right.
we're going to get right into all that. So the Hardcore Mortgage Show is brought to you by Fairway Independent Mortgage, MLS number 2289. We are an equal housing lender. We are licensed in all 50 states. John, I, and Harvey are all licensed in multiple states outside of Michigan. So if you are looking to purchase a home here in Michigan, Florida, Arizona, Colorado, whatever it is, we are your one-stop shop. So let's get into the details. So purchase market, we talk about it all the time. It has been hot. It's not going to slow down. The projections are out for the fourth quarter. We're in the fourth quarter, actually. So for the first quarter of 2022, and the data is supporting another 9% increase at the bare minimum in purchase applications in lieu of any looming interest rate spikes. So what do you guys think about that? Do you think the analysts have it right?
I do. I mean, I think that everything's going to stay, status quo. And down the road, rates will start to rise. But I think the beginning of 2022 is going to be just like the 2021, where rates stay really, really low. You're not going to, I don't think you're ever going to see those 2.5, 2.6 30-year fixed rates again without having to pay points and fees and everything like that. But I think, if you think about it, I always tell this story. Back in 2000, I was writing, Harvey, Becky, we're all writing mortgages at 9.25. And now we're 0.5% off of the all-time lows ever. Come on. I mean, let's not get greedy. Get the rate that you like, deal with the lender like us that you love, and, move on, and let's get things done for you.
I will piggyback on that because you're right. I mean, it's about perspective. Okay. And I feel like people lose sight of that when, you're talking about, oh, a 15-year rate was 2.375 and now you're going to get it for 2.625, for example, right? It's still an historically low rate. And if you're going to back off and wait for this other 10-year cycle for these rates to come back, if they ever do, I don't know. I think it's foolish because you need to think about it. If it makes sense now, you need to do it. And it starts with that conversation, and it's about not being greedy because you're right. COVID was a dark horse in what was projecting and creating these artificially low rates. I mean, if you want to even call it that. I mean, so with the Fed announcing that they're going to slowly taper, we're not going to see these point jumps. I don't think, hopefully in my lifetime, we don't see 9% again, but I do agree with you that 2.5 point higher than 2.375. I'll take it. What do you say, Harvey?
Yeah, definitely. These rates are going to be fantastic. And we see the numbers this purchase market has been hot. We always talk about it, that it's not seasonal anymore, but there's always that slowdown, especially as we lead into Thanksgiving and to Christmas time. There are some families now that are going to take maybe a little bit of a breather, some buyer hangovers from this fall and summer. Maybe those families didn't get their house, but we do see them coming back for 2022. Lauren Schoen from the National Association of Realtors is projecting maybe only about a 2% decrease from the numbers of 2021. And I brought up an article, and it looks like the permits for future housing, new construction, is going to be very strong, although it's a little flat right now. Again, leading into this holiday season, I find that the builders are gearing up. They're putting their crews together. They're getting the permits going, and there's going to be a lot of holes in the ground. Those new constructions will close about this time next year. So it's really looking promising again for 2022. We talk about home appreciation, again, somewhere around 7%. These are historical numbers, Becky. If you can imagine, you buy a house and the following year it's worth another 7% more. That's a lot of money, even on a $300,000 home.
No, you're right. I mean, and the good thing is that your first time home buyers, there's a lot of data out there that shows your first time home buyer is actually, they're buying it later in life, right? We talk about that. But right now, in the last several years, you could buy potentially that 5-year home where you could stay in it for 5 years. That's truly what your goal was. But the thing is that people are not just buying those 5-year homes. They're buying their forever homes right off the rip. Right. So when I bought my first house, it was supposed to be my 5-year house, turned into my 12-year house because I bought it right before the housing market did what it did. Right. I don't think we're going to see that. But and as far as the holidays, consumers, they get what's called holiday-itis, right? Where everyone wants to check out, you start doing your thing. Our job is to kind of motivate you to find time for your personal things, right? So I make time for other people to find time for themselves, but I don't make time for myself to find stuff, time to deal with like personal things. So if you are thinking about refinance, if you are thinking about purchasing, you need to give us a call, help us help you before these rates do start to increase, because they are going to start going up as we preach. And we've already seen it this week just from the inflation talks. So before we wrap this up, I do want to kind of go around with you guys and talk about what are some things that you guys see that buyers unintentionally self-sabotage themselves, right? Because part of purchase transaction, our job is to uncomplicate a complicated situation, right? And people want to just, I move money around. I just want to move my money around because that's just what I do, right? So, and we try to have these conversations up front. So I want to kind of just have this moment right before the holidays. People want to buy. It's Black Friday. I took a phone call last night from a buyer that says, hey, there's Black Friday sales. Can I buy these appliances for this house that I don't own yet, right? These are going to be things that come up. So what are some talking points that we can kind of just stop it before it happens for people entering in contracts over the next 30 to 45 days?
I'll start. And, one of the things that irks me the most, like Becky was saying, is tracking the assets. People just think that they can arbitrarily deposit cash or take money from whomever or sell musical instruments to be able to get your down payment for closing. And that just is not the case. I always start by saying that I'm here to make transactions work, not deny them. So please talk to me about whatever you plan on doing so that I can tell you what we can and cannot use. It is important to keep the channels of communication open on that kind of stuff because if you deposit some cash, let's say someone's got $10,000 in cash in a safe, they deposit cash into an account and we can't figure out another way to get the down payment, then we got to wait for 60 days for those funds to be seasoned. And that could kill a transaction. So that's my number one thing. And, the second thing always being, going out and purchasing new things or hiring a moving company before we've even got you approved. I've got a moving company set up for this Friday. That's great. I'm still waiting on your pay stub. What are you going to do about that? So that's my take on buyer stupidity. But it's we're here to help the transaction through. Hey, Harv, we're keeping it real here, Harv. Don't get upset.
No, you're fine with that. I use the word sabotage. And Becky, you talked about how people are sabotaging maybe their situation right now when they're buying. Well, what I see is, 3, 4, 5 years later, boy, families got real comfortable. They did buy the house in the good times. And here we are 4 or 5 years later, and thank goodness for the equity they have in their house, because boy, oh boy, people go after those credit cards. I got guys that have collection accounts, but they had no problem buying the solar panels for $25,000. And I'm like, hey man, I'm good with the solar panels. It's a great idea, but you didn't make your credit card payments. You got 2 of these in collection. So it's been really rewarding this time of the year. I really like and enjoy when the families are able to, the ones that are calling us, hopefully you're reaching out to your financial advisors and they're gearing you towards this debt consolidation. I just did the numbers for a gentleman. It's over $350 a month in savings. Every morning I seem to do these. And not only that, we're getting rid of additional funds. He's going to walk away with another $6,000 where he can pay off these high interest rates on his credit card. And one of the emails I sent to the client this morning said, congratulations. How about a 2021 no stress in your life Christmas? What a great time, the holiday season. Right now, folks, dig in there. We can get you done. If you do close in December, you're skipping the January 1 payment, Becky. You're going to go ahead and get a refund of your old escrow account. We're able to reset up the new escrow accounts by doing the refinance, which again, most of the families have an increase in their taxes, and we're seeing a lot of shortages in their escrow accounts. So just a sort of a great time of the year where I sort of kick it back. And if you're not buying a house, I'm reaching out to a lot of my families who had FHA mortgages, who I know might be having some trouble financially now, where a debt consolidation loan, a new mortgage, will really set them up for the future, especially what a great way to start the year.
Yeah. I hear a lot of timing, right, from both of you. I want to kind of go back to what John was saying on the buyer sabotage topic, right? All those are amazing points, right? And I agree with all those wholeheartedly. When you are purchasing a house and you are moving money around, like from one account to the other, it's going to automatically enter more accounts into the transaction. You want to simplify. If you have your money in one account, keep it in one account. There's no reason why you need to move it from your savings to your checking, because both of those are considered liquid assets. So do yourself a favor when we say just keep the money where it's at. Do that. Or if you do need to move it, you ask your mortgage professional, so that way they can tell you what to do. So that way you're not frustrated because you're having to take extra steps. Okay. In regards to the new debt, if you open new debt, it will get flagged on your credit report. And if you are really thin on qualifying, you now entered in another $200 payment for appliances that on a house that you don't own yet, right? And now that might jeopardize your overall loan approval. So again, I know it's tempting during Black Friday, but you need to speak with your mortgage professional, especially here at Capital Mortgage Funding. If you're thinking about doing some Black Friday shopping and it equates to you opening a new credit card, you need to maybe rethink that and find another way, because that is going to affect your loan approval no matter what. It's going to come out. Moving companies, that is something that people do, and you got to get lined up. Everyone's worried about getting behind the eight ball. However, what that does for you is it creates unnecessary stress. It's going to now create this deadline that you have made, when the first priority is getting to the closing table, getting the loan clear to close. You do not want to put the cart before the horse, right? All of it is timing, and we're here to help you. So these are some common things that really do come up more than we would like to say that they do. But at the same time, we're professional. We know how to get you around it, but we want to avoid it if we can, especially with the holidays. There's a lot going on. With Harvey, yes. Equity. If you are refinancing, you got all these people, they just got into the houses, a couple of years ago, maybe they're in a bad spot, but it's about keeping status quo. You do not want to start missing, like get the solar panels and then miss your $25 minimum payment on your credit card, right? It's all about just keeping things where they need to be. We understand that life happens, and that's why we want to be that phone call. So if you do see yourself kind of slipping and maybe getting in a bad spot, you can get that escrow refund. You can skip a couple payments right now around the holidays. I actually just took a phone call from someone today. Hey, we just got our escrow refund. Is this amount really ours to take? We just closed a month ago. Yes, that is your money. We timed it out beautifully just around the holidays. It's all about timing, and we're here to uncomplicate the complicated situations that sometimes buying and refinancing can produce. So with that being said, I know John's got some closings. He's got to, get in before Thanksgiving. You got a plane to catch, my friend, over there, Harvey. So
I'm okay.
Any final thoughts before we wrap this up today?
John, you want to go first?
Yeah, happy Thanksgiving to everybody. I'm sure we probably will not have a podcast next Wednesday, the day before Thanksgiving, but you never know. But if not, happy Thanksgiving to everyone. Safe travels to everyone. And I hope that everyone enjoys the family time that they missed out on last year.
Yeah, true that. That's a great point.
I'll circle back to the sabotaging and things. And again, what these families are doing, again, we call it cars, guns, and guitars. Those are that might have some value. And you can document them properly by showing you had the ownership. So if you are going to be selling a car because you need this asset to help with your closing costs, you're going to need to not only make a copy of the sales agreement, You can just go to Microsoft Word and definitely put that in writing that you're selling the car as is. You want to include the VIN number on that sales document. Also, provide a copy of the title showing you had ownership of this car, and then make sure that the deposit, if you sell the car for $3,500, if it's sitting there collecting dust in your garage, it's an old lumpy and you're going to dump it. These used cars are worth money now. Go ahead and document it properly. Again, reach out to your financial people, your mortgage people, the experts, and go ahead and document these items, because some items definitely could be sold and you can use that money to move your family forward. And again, if you're going to use that money for a down payment, there is a way to do it the right way. And again, a happy Thanksgiving, everyone out there.
Yeah, documentation ad nauseum, right? That is what, mortgage transactions kind of portray. And, we want you to have a healthy, happy Thanksgiving. It's like I said, hopefully this one is better for you than it was last year. Obviously last year was crazy town. So I'm looking forward to spending some time with my family as well. And I'm looking forward to getting these people, our buyers, borrowers into their new mortgages and their homes. So for myself, Becky Alley, John Kolb, Harvey Freed, this has been the Hardcore Mortgage Podcast, brought to you by Fairway Independent Mortgage, MLS number 2289. And you guys have a great Wednesday. Woo!